Our distinguished guests are going to tell us why we ought to care about revolutionising reporting. Let me introduce our stellar cast onto the stage. We've got the Honorary Theresa Graffenstein. She is the Inspector General at the US House of Representatives. In that role, she's responsible for planning and leading independent, non-partisan audits, advisories and investigations of the financial and administrative functions of the House. Over on my other side, we have Kath Ingram, who is the Chair and a Partner of KPMG here in Canberra. Ian McPhee, here on my left, is the former Auditor General at the Australian National Audit Office, a position he only left a couple of months ago. He's also held various roles in the Department of Finance and the Australian Bureau of Statistics. And last but not least is Ian McIntosh, who's just flown in from overseas. He's resident in the UK and is the Vice Chairman of the International Accounting Standards Board. He has significant public sector experience, having chaired both the Australian Public Sector Accounting Standards Board, otherwise known as the APSASB, and the International Federation of Accountants. You're allowed to do it if you say the whole thing as well. So let's launch in, and I think we might just start with an overarching question about the impact that the changes of the reporting regime is having. I'll start with you, Kath.
Great, thank you. Well, the reporting regime for Australia hasn't quite hit. KPMG has been an early adopter. It released a set of accounts a couple of days ago for Cochlear and Downer EDI here in Australia. And in the UK, it's done a few more. Rolls-Royce was one in particular, the very first one. The impact it's having, though, is it's the thinking man and woman's audit opinion. Firstly, the opinion comes first, so that's a significant change. But the commentary that has to accompany this is quite thoughtful, quite detailed, and I know as a firm from my colleagues I've spoken to, it's certainly taking a lot more time and rigour to get those messages right.
Ian?
Well, it's very much the profession trying to provide a bit more transparency about the important matters in audits that it undertakes. I think I recall when I was a student many years ago, I recall reading about a book that said basically auditors ticked and flicked and trusted in God. The profession's moved on a lot since then, but this is designed to provide some of the insights which auditors do get. They genuinely do get a good understanding of their clients' operations, and particularly bearing on financial statements. And this is a genuine attempt to provide greater insights to particularly investors about the significant issues occurring in those audits and why they were important and what the auditor did in response to them. So I think it's a genuine attempt by the profession to add value. The other nice thing about it is, even though it's only focused currently on listed companies directly, the requirements do allow the auditor to voluntarily, in other client situations, to disclose key audit matters as well. So I see the book calls it revolutionary. I'm not sure whether I'd quite go that far, but it's certainly a big step change within the audit profession, and it's nice to see it happen.
And we are going to talk about the specifics of the change, which I understand in Australia come in December next year.
Maybe September. So I don't think it's been announced the date yet. So yeah,
thereabouts. Theresa, give us a bit of an international flavour from the US perspective. Where are you in terms of the international standards and coming up to where we're headed? You're, I understand, a little bit further behind.
Yes, we are actually. Without getting into acronyms, we'll discuss it a little bit later. But yes, I would say on this particular issue, the US is a little bit further behind. We're not under international audit. Sorry, I've already violated it. We're falling under the public company accounting oversight board, and we're still through comment period. And we actually we've gone through comments. They're not expecting to reissue until the end of this year. So I think one of the good things, even though we are a little further behind on this, and while we don't call it key audit matters, we call it critical audit matters, but it's kind of translatable. And we'll get into the details later. I think, and be able to adapt it within the U.S. regulatory environment.
Okay, and I've left you to last on purpose because the UK, of course, has been an early adopter.
Yes.
What's been the experience?
Well, I should state firstly that I haven't been an auditor for a long time, so I'm not seeing it through auditor's eyes. I'm seeing it more through financial reporting eyes. And I think this is part of the Financial Reporting Council's actions there to improve governance in general in companies. And that's a reason they adopted early. They're also very keen to be internationally comparable. So it's the second year. You mentioned KPMG have been quite involved, and no doubt all the other big auditing firms have been. I think it is improving transparency. And from my point of view of financial reporting standards and statements, we do a lot of work with investors, and there's often criticism made that annual financial reports are losing their relevance. And we've done a lot of asking questions about that. And in fact, we find the investors quite like the annual financial statements because they're a very verified statement that they can rely on. All the other stuff that comes through goes up and down a bit. And I think this expanded auditor's report will help in that regard, that they'll actually learn more things, and I think the annual financial report will become even more relevant than it has been.
Now, there are proposals for auditors to report what's known as key audit matters. I'm not going to call them KAMs. Okay, so I might. So these are going to form part of the formal audit reports on the financial statements of listed companies at the moment. First of all, what are the issues that are likely to be canvassed in those KAMs, Kath?
I think we'll tend to find it's areas where there's greater judgment. So where judgment has to be applied, you're using techniques of estimation. They could be particular events as well. Revenue recognition, where you're making judgments about the interpretation of control and revenue. And so it also could extend to IT systems, where you've got companies that are very dependent on their systems of control, technology, and areas, I guess, where the auditor has to really focus and wanting to expand on what that meant, what that area of focus was. What did you do?
Can you give us an example, given you've already had experience in some of these?
Personally, I haven't issued those, Emma, so I want to point that out. And I've been a master of doing some research to read those, but particularly ones could be around a product recall, if there'd been a significant event that could have impacted inventory, if there had been changes to revenue recognition that really had a material impact on the financial statements. So things where the auditor has had to exercise quite detailed judgment, execute some particular procedures. So it's telling more the story of how you formed a view, rather than, as auditors, our worst decision we could make was we issued the wrong standard opinion. We just had to pick a standard one up. This is highly tailored now.
You'd have to think, wouldn't you, Teresa, that this provides incredible value to the investor, this added key bit of information, these key audit matters. Is it being considered in the United States as well to have these included?
Oh, absolutely. I think that one of the driving reasons for the U.S. and the public company accounting oversight board in looking at, we're calling them critical audit matters, is that there's definitely a drive to give more transparency to investors so that they can make better, more informed decisions. I think it's sort of this natural tension or struggle between having the traditional boilerplate language in our auditor statement, opinions, and giving real insight into investors as to what's going on behind the scenes. But what we've seen in the comment letters back so far for we're calling it docket 34 is what it's called in the U.S. The main sort of concerns right now as currently written, because we're a lot more in the formative stages, is that there's a lot of subjectivity. And so the thing is that you need to balance out when you have sort of independent thought and you're going to put a little more brain power into it, right? You're going to shift away from the very boilerplate, cookie cutter kind of responses. But the thing is, if the pendulum goes too far to too much subjectivity, there could be so much wiggle room there that you may end up having the same, if you take two auditor teams. In fact, for example, the Center for Audit Quality, which is associated with the American Institute of Certified Public Accountants, had done a field study. And they put out the U.S. version, the criteria is currently written, and said, okay, apply this to some of the jobs you're looking at. And the companies that they applied it against actually ranged between, small, medium, large, and mega type size companies. And it was interesting. What we found is that even within the same CPA firm, if you took two different teams applying that same exact criteria, they applied it completely differently. And so I think that what that shows us is that we need to kind of nail it down a little bit more. There's a little too much wiggle room in the U.S. version of this so far.
Where do you see the value, Ian, in these key audit matters being included?
Well, I think it's, as other people have said, the insight it gives into the process. It's a little unusual, though. We've got an initiative at the International Accounting Standards Board on a disclosure initiative. And most people assume that what we're trying to do is cut down the length of financial reports. Some of the big banks are 400 or 500 pages now, and everybody says, who's going to read all that? We're not necessarily tackling it from that point of view. We're trying to work out what are the most relevant disclosures and how they should be set out and whether they should be standard. The subjectivity question, we always have a problem with the Americans on subjectivity because we like it and they don't so much. It's your litigious society over there doesn't help.
It's inherently subjective though, isn't it?
Yes.
It's the auditor's discretion.
Yeah, well, judgment, yes. So in some ways, this will make the reports a bit longer again, and so the same questions will arise. Is all this information really relevant? Well, if they're good auditors and do good reports, yes, it will be. Hope you don't get boilerplate, where people just report the same thing. Hope you don't get too much length, because nobody's going to read all that through. And so I see it working with what we're doing in the Disclosure Initiative to try and give more relevant information. I like the word relevant more than material, actually, but that's where it should head.
What's the difference?
Between relevance and materiality? People think about materiality more in terms of size, often. They don't need to, but they do. Whereas relevance, everybody understands whether something's relevant or not.
Material normally refers to whether it impacts the...
Yeah, whether it's got...
There has a financial impact.
Yes. Yeah.
Ian, if there is such value in these key audit matters, why are they being restricted at the moment to listed companies? Why aren't they being applied to public sector as well?
It's a good point, because if you took a principled point of view that it's beneficial for users of financial statements to be informed about these key audit matters, then why shouldn't it apply to the universe of audited clients? That's the question, I guess, Emma. I had a look into this because I think it's a good question, and the International Board said currently within the body of auditing standard there is no generally accepted definition of public interest entities to pick up other companies. In fact, if you look at their work, you can see there's quite some concern amongst some constituents that, for instance, some banks and some insurance companies would not be picked up because they're not necessarily listed companies. There would be a range of other significant companies. There would be the not-for-profit sector with some large entities in there, and of course the public sector. The IAAS, the International Auditing and Assurance Standards Board, took a measured approach to this and said, what we'll do is therefore nail the listed companies, they need to be covered, but then also allow the auditor the discretion to include key audit matters in reports of other audits, and also if law or regulation in any country requires key audit matters to be disclosed, that there clearly should be followed as well. So they took that measured approach, and then they said, and as well, in 2 years' time after the implementation, we'll have a review of the process, and it wouldn't surprise me if it was extended, because seriously, if it's adding value to the audits of listed companies, why wouldn't it add value to a broader range of clients? So I think the measured approach is sound. I should say, for completeness, in my reading, the only constituent group who weren't so keen on these key audit matters being disclosed were the preparers. Unsurprisingly, but that was just on the way through. Thanks, Emma.
So, are there circumstances, this one's, I guess, for you, Kath, are there circumstances when a key audit matter might be excluded from an auditor's report on a listed company?
I mean, it is all about judgment of the auditor, and I think there are, whether something is specifically excluded, I think there's always got to be the view of commercial sensitivity about the commentary, whether judgment is applied and you take a matter that perhaps was quite complex and you try and make it too simple. And you're still really trying to address these are the accounts of the company and they're responsible for preparing them, and it's not taking away from the notes should be comprehensive to disclose the particular situation. So I think only on that sensitivity, but it's going to be interesting because you bring a matter forward 1 year. Does that mean it's there in perpetuity? We all are inherently more conservative. We don't like to sort of take things away. Is that sending a message to the market that last year we thought it was X, this year we think it's Y? Will these things grow because we're so conservative? So I think the excluding things will be an interesting one, perhaps more on commercial sensitivity, but I'm more interested to explore, you know, how do you not let this proliferate into something that sort of meets the needs perhaps of those issuing them because they're concerned about risk, and you end up losing that transparency and the story that we were trying to address in the first place.
Can I ask you to address that issue, Ian, about whether, I guess there's a few issues in there, the exclusion issue, but the other one also about whether this becomes a year-on-year matter. If it's a matter this year, why isn't it a matter next year or in fact in 5 years' time?
Yeah, well, some will be, won't they? And some will always be important. Some will be more transient. So the new revenue recognition standard, I spelled it, the whole thing, it's just being brought in, and there's going to have to be judgments made in implementing it. And so in that case, it might be just the first year that you implement it. You explain the judgments you had to make to get the new standard applied. I think another point, and I was thinking as you were speaking, was working with the company. You're going to have to try to make the notes in the financial statements and this key audit matters complementary somehow. You know, you don't want repeats of. You might even be able to refer to the financial reporting, but you don't want to repeat a number of things that are already disclosed in the notes of the accounts. So it will be quite a delicate matter, I think, working with the company to get the two statements working with each other.
Invariably, I imagine that these changes will mean you will have much more dialogue between the auditor and the board, and perhaps between the board and the management.
Yeah, particularly if you're going to publish something they don't like.
And I think then that factors into the time that it's going to take. Sometimes with listed companies, you know, those filing deadlines are quite tight. I know our firm's in its, very heady season. And so to factor in this thinking time, this bit more ponderous, relating to management, yes, perhaps teasing out we want to raise a matter sensitive about IT systems, they're concerned about why we see it there. That'll improve a dialogue, but that's going to take more time.
Yeah,
and we've got to factor that in.
In support of that, we've questioned a lot of companies in the last 2 or 3 years as to why they're reports are so bad, to put it bluntly. You know, why are they so lengthy? Why are they so verbose? Why is there so much boilerplate, etc., etc.? And time is a big factor. You know, they're finishing like a huge conglomerate all around the world. They've pulled it all together. They've got it in place. They don't have time then to sit back and look properly at the whole product and see if it fits together properly. So that will be, you know, this will just add to the time as well, I think.
I think I wanted to stay on this particular point and have your perspectives on it as well, Teresa. The issue, first of all, of exclusions and what you put in one year versus the next year, and why wouldn't it be there the next year if it was, you know, still material or relevant in year 2 and 3 and so on. The exclusion issue. And then also, I guess, where we've come to, which is that sort of dialogue with management and the board and potential conflicts about what's in and what's out.
Absolutely, I think that's a great question. And in fact, that's one of the main things that you see in a lot of the comment letters to the U.S. version, docket 34, is that there's a lot of controversy over if an auditor decides it's not a critical audit matter, using U.S. terminology, what type of documentation do they need to do to document what judgment they used to exclude it, right? And to an earlier point about the litigious nature of society, that's a fact of life. And so if a CPA firm or accounting firm is concerned that they've excluded potentially a critical audit matter that maybe another accounting firm would have included, it's going to lengthen, the risk is it's going to lengthen the amount of audit work, the amount of documentation, the amount of justification and judgment and management review. And so that's an area that we really need to flesh out in the U.S. before I think that's going to go forward. In terms of materiality, okay, shifting from year to year, I think that that's a great point. It gets into the justification. I mean, things change. Something that's really critical this year might not be that critical next year. I mean, it's just the sort of evolutionary nature of the world that we live in, right? But I think that gets into understanding documentation requirements and kind of getting rid of some of the subjectivity, at least from the U.S. perspective, that currently resides in our draft criteria.
Do you see the potential for tension between the auditor and the board or the management in terms of determining what is a key audit matter?
Oh, absolutely, because without removing some of the subjectivity. So, for example, if something required a lot of auditor judgment throughout the course of an audit, but it was later resolved, and it was something that was very, very critical, but it was resolved during the course of the audit, do you include that? Do you exclude it? And so the thing is, from management's position, if it's been resolved, I can definitely see them saying, I don't want that in my report. We've resolved that. What if you were to stumble across something like the potential indicators of fraud, but then it took up a lot of your audit time? It was something very critical, required lots of judgment, but it resolved, and it was not something. Is that something that you include or not include? But under the current U.S. version, it doesn't have those nuances yet accounted for. And so if you look at a lot of the public comment letters from public companies like Coca-Cola, Apple, some of the really big ones, FedEx, that's the types of concerns that they're raising.
It's interesting, isn't it, Ian, because so I'll pick up on the terminology you used then, that the company said, I don't want that in my report. Well, whose report is it? Is it the auditor's report? Is it the company's report?
Well, that's an easy one. It's the auditor's report. Mm-hmm. But the wise auditor would obviously have a bit of work to do to bring the client along with them in explaining the key audit matter, because the key audit matter is a subset of the various matters that auditors talk to those charged with governance or audit committees about. So
it almost casts the auditor in an entirely new role.
Well, it's generally speaking, picking up on Ian's point, in these complex areas of judgment, there will be note disclosure about how the entity arrived at its approach or accounting policy relating to revenue recognition or impairment or related parties or whatever. So there will generally be a note disclosure. In fact, I think I'm right in saying the standard expects that the auditor will cross-reference to the note where there is disclosures in the financial statement. So it's going to be the rare case where information is not publicly available. And that was some of the concerns, if you read the responses to the International Board. The concern was the auditor releasing original information, that is not out in the work, not out there at all in the marketplace. And the standard does allow, the point Kath was making, in rare exceptions where the auditor assesses that the adverse consequences of disclosure are greater than the public interest of disclosure, the adverse consequences of not disclosing versus the public interest. When they weigh that up, if the auditor, and I emphasise the auditor, is persuaded that for commercial reasons, competitive reasons, whatever, that shouldn't be disclosed, and that's a legitimate call, and clearly they need to go away and document that, etc. But the important thing to make point of, though, is the standard talks about in the rare circumstances, or words to that effect, meaning this is not meant to be a light touch for auditors to lean over. It's meant to be very rare circumstances with a demonstrable, commercial or some other impact. So it's not meant to be, auditors got a job to do, and they're expected to do it, and it is their call at the end of the day. But there'll no doubt be robust conversations, and it's so important with this very new initiative. Conversations start with the audit committees early about the issues which are uppermost in the minds of the auditors, and the engagement continues right through to the end.
I want to talk a little bit about communication with stakeholders, and I'm curious to know whether investors and some of your other stakeholders are actually aware of what's going on and how it might impact them, and how they're being educated in terms of reading these new reports. Is that something that's happening, Kath?
I think it's starting to happen. I think for the firms, and speaking with ours, it is a revolution by a great enormity that's requiring us to address how we approach the types of skills, how we collaborate. And when I mean collaborate, it's the quality assurance, the check and balance, the constructive challenge. So that's quite different. So that's going on certainly, and I imagine across all firms, and you've got to have that level of sort of comfort to be able to then to take a discussion to your stakeholders. And I think very much that point, the resilience of the auditor, and Ian's point, the auditor owns that opinion, but there will be robust and difficult conversations, because all of a sudden there's a whole phraseology that's coming out about how you describe something. And we all know, the sort of sleight of word can upset someone. So there's a whole different skill set there, which is also going to really, I think, test some auditors who perhaps haven't had to be as eloquent with the language in articulating what probably is quite a complex matter.
Is it likely that, up to now, and correct me if I'm wrong, but investors haven't really had too much access to auditors in terms of grilling them for information about the accounts?
Well, it's a point actually that the Chartered Accountants make in their publication, which I actually do want to really commend Lee and the team. It's very plain English. I think it sets out all the issues, and there was a particular comment in that publication that says there's a little bit of a mismatch because there are quite strident rules about the role of an auditor at an AGM, and then you've got this broader commentary. So is it expected? And I think a chairman will have to be, it makes a point quite sort of strong in how that AGM is run.
And sorry, for those of us who don't have that to hand, what do the rules say about the auditors at the AGM?
Oh, now you're going to test me here. But the auditor is really only limited to commentary on the opinion, not commenting on all the financial results of the actual company.
It's quite tangled.
Correct. So that will be an interesting sort of time. And so all of that communication with those charged with governance now about how the AGM's going to be run, what my role is, what the report is. So I guess all communication's got to be seen as good, but there's going to be a lot more of it, and through that an education process.
I wonder if I could just mention on that. We've put an enormous, the International Accounting Standards put an enormous amount of effort and trying to bring investors into the process as a whole, because our standards are produced for the good of the investors, for the users of financial reports. But they're very hard to get hold of. They're very busy people, for a start. They don't put high stocks on a lot of the stuff, or a lot of them don't. I mean, there's very good ones and not such good ones. We have a whole team that does nothing but try to keep investors involved in what we're doing. And sometimes it's a bit dispiriting. Even when we've got investors on our board now, for instance, and I don't want to be critical of them, but even when you've got investors there, their imagination's not great. And there's a wonderful... They know what they've got.
It doesn't always match yours.
They're like statisticians. You know, they've got a set of statistics that they've kept for years, and they don't like much change, and further information's not all that useful to them, and, you know, they can be quite simplistic. And there's a wonderful quote from Henry Ford, the maker of the first motor car, who said, if I'd asked my customers what they wanted, they would have said faster horses.
You don't know what you don't know.
Yeah, exactly.
And so, Teresa, on the matter of communications with stakeholders, investors in particular, do you see that changing and evolving with this process?
I do. I think that one of the things is that accounting, we need to make sure that we're changing and meeting stakeholder needs. Otherwise, we're not going to provide value. We're going to push ourselves out of a profession with our boilerplate and our rigid sort of just wanting to use language that only we understand. We need to make sure that we adapt and we evolve to remain relevant. And so I think absolutely, I think that communication is key. I think that what we do is a very noble and very important profession. We just need to make sure that it's attainable and understandable to people so they understand why it's very important to them.
What is the relationship between investor and auditor in the United States?
Well, I think coming from a government perspective, I think I'll shift that to auditor-citizen. And so I think that from that is that I think it's a good analogy, okay? Because a citizen is putting their money through taxes into the good, potentially the good use of their taxpayer money, right? And the auditor is the person or the group going through and making sure that good governance processes are in place, that good procedures are in place, that people are following the rules, that sort of thing. And I think that it's sort of this, you have this, it's indirect, but it's a relationship with the citizen. And therefore, if you look at a publicly traded company, an auditor who is auditing absolutely has a fiduciary responsibility to the investor. Ultimately, it's indirect, but it's definitely there because that's who are we doing this for? We're going through and making sure that rules are being followed, that good practices are in place.
It's a good time to bring you in, Ian, because you come from a similar vein, of course, from the public service.
I think, from my perspective, one of the real benefits, an incidental benefit, is that the client, the preparer of the reports, will, knowing that the auditor is minded to refer to a key audit matter dealing with a complex calculation or revenue recognition or whatever, the client will just take a bit more time in their own disclosures, in their own financial reports. And I think we might even get some more clarity and even more concise presentation of some of these very complex areas which at the moment are terribly hard to read. And you see that in the public sector as well. We've got some departments who've got complex liabilities and they go for a couple of pages of notes explaining all the ins and outs of why the actuarial calculation is so hard and the variables shift around so much, and then so do the numbers, and we're talking billions of dollars here. So I think it'll give a stronger positive focus to that. So I'm pretty optimistic. Sure, there'll be a bit of indigestion in the early days, but I think we'll all get on a good wavelength and together, because most of these, as I said earlier, the disclosures and the audit key matters, I think there'll be a complementarity to them at a certain level. And so I think once we get on that level, have the conversations, have them early. I mean, the last thing we want to be doing is discussing these key audit matters, what they are, after the 30th of June, Kath's point. We've got to get them early. In fact, we've got to let clients know in the audit engagement letters that there's a possibility we'll be referring to key audit matters at the end of the year, etc. We've got a whole process which we will have to go through, and of course we all know audit committees are going to be terribly focused, and the chairman's going to be terribly focused on, well, are you minded to include key audit matters in your report, and if so, what are the potential ones? So it's going to be right up there on the agenda pretty quickly, and but it's a good thing. It's a good thing, but as I say, I think in time it'll smooth out, Emma.
Sorry, back to you for a moment, Teresa, because I did want to ask you, we talked earlier about, you know, if there's value in these, why only for listed companies? And I didn't ask you specifically, has the American Institute of Certified Public Accountants Auditing Standards Board, which is the US standard setter for non-listed companies, have they issued a position regarding expanding the auditor's report to include critical audit matters, key audit matters for non-listed companies?
So in keeping with the non-acronym, I'm going to rely on your definition of the acronyms. No, so the American Institute of Certified Public Accountants Auditing Standards Board, they have not issued a position. They're as you've mentioned, they are, so the Public Company Accounting Oversight Board in the U.S. oversees all publicly listed companies, whereas the AICPA's Auditing Standards Board does all non-listed companies. And so it's sort of a wait-and-see standpoint. They've gone through and they've mapped key audit matters included already in the International Auditing Assurance Standards Board with docket 34 and seeing where the gaps are, where the synergies are. But until docket 34 in the U.S. gets forward, I mean, they're only coming back with they've incorporated first rounds of comments. We've not seen those incorporations yet. And so until we actually see the next step, it'd really be premature for the Auditing Standards Board to get out ahead of that. Because you won't want to have non-listed companies have a completely different set of criteria than publicly listed companies, right? That would be sort of inefficient. And so I think we're going to wait and see what happens.
What's the situation in the UK?
I think in the UK it's also just for the public listed at this stage. It's a less complicated organisational matter because the FRC looks after both lots. The Financial Reporting Council looks after... Pass me my glass. Both the larger listed and unlisted. Interesting point that Ian made earlier about public interest companies. We've got, I was going to say SME, but I wouldn't do that, small and medium-sized entities standard. And we say that can't be applied to companies with public interest, and then we define public interest as listed or those that hold funds in a fiduciary capacity, and that includes banks and insurance companies, which are the ones you're worried about. So I think they'll wait and see in the UK as well. I think they need a few seasons of this reporting before they start thinking about expanding it.
It would seem to me that there'd be a real kind of value in standardising globally some of this material, because especially considering how global investment markets are now. It seems odd that we're sitting here talking about what's happening in the UK, what's happening in Australia, what's happening in the US, where money flows are so fluid.
We have got the International Audit and Assurance Standards Board, and so the UK and Australia, certainly to my knowledge, are following that standard. So that is, or will be, a globalised standard, except maybe for the United States, who generally like to do something a little bit different.
And yet, all roads investment-wise tend to lead to the US. So it's
But we actually, I wouldn't say that we're completely apart from the International Auditing and Assurance Standard. We actually have a sitting member on that, as well as the American Institute of Certified Public Accountants, the Auditing Standards Board for non-listed companies, a standing member, because we don't want to be that divergent. I mean, we're pretty much trying to stay in alignment with that, just trying to account for different U.S. regulatory requirements, but we're trying to stay as much in alignment as possible.
Not only for auditors auditing, you know, because there's such a flow of
Yeah.
labour as well. So you have an auditor from Australia go and work in the US. You want to sort of be a little more
And even investors.
certain about
Investors don't just invest within the confines of where they live, and we invest globally. And so therefore, we wouldn't want an investor to pick up something and have to completely relearn and pick up a completely different report. And so there's investor types of concerns that need to be taken into account as well.
Now, before I open it up to questions from all of you, I just wanted to talk briefly about digital disruption and about the way technology is advancing at such a pace, how that might change things again in terms of reporting requirements, and that might really we might really find there's a revolution in reporting if that overtakes where we can imagine reporting is right now. Perhaps, Kath, I'll start with you.
Well, I think the one thing might have been in our sort of team huddle, shall I say, before we got on stage, we were talking about what audit gives, but it very much is that confidence. I think, Ian, you were sharing that point, that it's the one time when that independent view and that people can take confidence at a point in time. But that's what it is, a point in time. And with disruption and how people are seeking information, they want it real time. Social media, they want it prospective. And I think to your point, Therese, about keeping the profession relevant, so the key audit matters is enabling us to perhaps articulate and tell that story of what really, you know, gave us, your word, Ian, indigestion as we did the audit. But I think digital disruption is really providing us with perhaps greater areas for change in the audit, you know, devaluation of assets, but it's more about how people also want to get information, and they want more prospective information. So I think that's the next challenge.
And they want it more immediately.
Oh, yeah.
So you're going to get some of that information out potentially when you don't necessarily want it out.
No, true. And that's why you all have media monitoring now. So the social media monitoring, and KPMG has SR7, and we sell a service now to help companies monitor what the social media is saying.
What's SR7? Sorry, what is that?
Oh, that's what it's called. There is no other acronym. That's
But what is it?
Oh, it's a social media company that monitors
right.
for companies, what Twitter's saying about the ABC.
So you hire them and they tell you what it's saying about a particular...
That's right.
Well, so that could, in fact, create a whole new key audit matter that you hadn't thought about.
Yeah, exactly.
What do you think, Ian, as far as social media, digital disruption, and how that might change
I guess,
the way we're talking about reporting today?
Yes, we're just calling it technology at this stage, and we're quite immersed in trying to think through. And we've got a strategic document out at the moment. We ask that question of our constituents, what they think we should be doing. And we have this XBRL thing. We don't, and that's an acronym. I don't know what it stands for. Extensible something language. Yes.
There'll be a test afterwards.
And we're now looking how our standards translate into that technology at the time we issue them, which is pretty scary, because quite often that technology takes things further than we actually meant them to be taken. So they define things that we don't define, because they have to for a digital age to get the things in. So we're really just at the beginning of it. I'd be very hesitant to think you'll get information a lot quicker, though, not good information. I mean, if you've got very complicated transactions, computer won't be able to just compute them, I don't think, quite a while. You've got
I'm sure there's some software maker out there who might challenge that point.
Maybe the complexity suits some people.
Well,
you know,
an $8 billion
time.
takeover of Vodafone or something, sorting out all the assets and all the liabilities and all the... It'd be quite hard. Anyway, we're asking the question, and we're taking steps to try and get more integrated, but we're a long way behind. we're dinosaurs in this regard.
What do you think, Ian? What's the potential?
I think the only thing I can't add too much to what Ian and Kath have said, other than I think the profession is alert to the value-adding possibilities, and this is as the book says, quite a significant step by the profession to take on board the experience following the global financial crisis, the feedback from a whole array of stakeholder groups, and I think has done, and even decisions like bringing the opinion up to be the, at the front of the auditor's report and the basis to be the second paragraph. These are sort of responding and a good sensible move. So I'm very positive that the profession will continue to be responsive to the world around it. But I take the point that as an auditor, you have to be careful not to, because people take confidence in the work you do and take assurance from the work that you do, you have to be careful that you've got a sound basis and you're just not running off something that's coming out of a machine and you're saying, yeah, that's all fine. I mean, it's a very structured, logical, rational sort of approach to making sure you are giving a sound opinion on a complex set of financial statements. And so conservatism, as you can tell, has always been a fairly important part of the profession. Now, to not play it fast and loose, make sure you've got the evidence and the support and it makes sense to you before you give the opinion across the table. Thank you very much.
No tick and flick.
No tick and flick and all of the rest of it. That's right.
Teresa, do you see technology disrupting this space, the reporting space?
Well, actually, I'm going to turn that question around. I think that technology, I think that if we start thinking about the next generation of critical audit matters or key audit matters, it's going to be very technology-centric. Cybersecurity is absolutely one of our biggest off-balance sheet risks that are lurking on the horizon. Absolutely. And we're not accounting for that right now. And I think that's something we need to tackle as a profession, because there's no other risk out there right now that can take down an entire company. It poses an existential risk. And unless you're looking at those specific controls, we're going to miss it. And so I think that's one of the things that's on the horizon that we need to really start thinking about. If we're really going to provide really citizen value, investor value, that's the one risk that's out there that I think that's going to jump up and get us.
It's a super unknown though, right?
It is.
It's
Yeah,
very
it is.
hard to quantify the risk and plan for it.
Well, I think that there's plenty of key controls that you can judge against. Most auditors, we're using criteria to measure against, and there's lots of frameworks that are out there that we can measure companies' progress against. And right now, that's just not something. We look at IT controls over systems related to financial reporting, so that's one thing. But we're not necessarily looking at overall cyber risk. And that's, you talk to your companies like Sony or Anthem or some of these, Target, Home Depot, all these big ones. The next wave is probably going to be bigger. And it might end up knocking somebody out into becoming a going concern type of issue. And so I think that that's the thing that's on the horizon that we all need to start paying attention to.
Okay, I'm going to ask for questions from the audience, and we had some submitted earlier, so I'll just put my Tony Jones hat on and I'll call for Rob Ward, who submitted a question, I think, over here.
Actually, I'm going to change my question.
We didn't plan for that.
I know.
Don't make it controversial.
No, sorry, it's not too controversial, but I think it'll be relevant to people in the room. So, and I'm responsible for this, so I'm deeply passionate about it. I was going to ask about boilerplate, and I think you've covered that. I think the lawyers and the firms will try and kill the audit partners in terms of being the substance of what they want to do. So you could talk about that. My question is, and I don't know who's going to answer this, will the audit partners be up for it? Ooh. Ian, I think you're probably the best, but will the auditor of today be up for the challenge?
Well, absolutely. They certainly ought to be, and I think a lot of it is in the early advice to clients and working the issues through. The other important thing to bear in mind is that the the literature that the International Board has put out say it's very important you not seem to be giving a conclusion directly about the specific matter you've raised as a key audit matter, because the audit opinion itself is providing the opinion on the accounts as a whole. And so it's quite interesting that the way the standard is set up, it says in the key audit matter, the auditor is required to explain why it is a key audit matter, what the auditor basically has done in response to that, and any cross-references, if you like, to the disclosures in the accounts. And it's optional if you want to talk about the outcomes from the procedures that you've performed in that area. But it makes the point be very clearly, don't give a sort of a subset conclusion on a particular matter relating to the financial statements, because as we all know, the opinion relates to the entirety. And so there will be some issues, and particularly in the sensitive areas, there's no doubt. And in the key parts of the business, whether it's revenue recognition or carrying values of assets or whatever, there will be discussions. But I think the accounting partners are up for it, you know, these discussions go on at the moment, as many people in this room know. It's just that now we have to go a bit public. My concern is that the discussion doesn't get too technical. In fact, in my career, I've found the older I got, the more powerful plain English is in the way you write and present things. And if you find that these explanations are all technical mumbo-jumbo, I think as a profession we've failed. And if I can just say, Emma, I sometimes say when I was in the chair over the road there, and the staff would walk into the office with the big book of standards and say, Ian, there's a problem with this client in paragraph 75, XYZ, they haven't done this, and there's all these debits and credits and things going on in the standards book. I say, close the book, put it aside, tell me what the problem is in plain English. And I think that's the challenge for the profession, both as the preparers, to get the explanation going and succinct, and for the auditors, because we don't want 1 or 2 pages of these key audit matters. We want succinct encapsulation of the issue, and I think together we can achieve that result.
As young journalists starting out, we get told by the big old crusty editors the KISS theory. Keep it simple, stupid. I think that's what you're talking about. Yeah. So are the partners up for it? Just following on the question.
Most of the partners I knew were retired.
Breathing a sigh of
they certainly wouldn't have been up for it.
they wouldn't have been up for it, so they retired. There's your answer.
like Rob, you see. I mean, this is why he's asking the question. Yes, I think you've got a strong profession here. I think there'll be times when they won't be as frank or as honest as they might be. They might just bend back a bit for the sake of client relationships. I mean, this is normal human behaviour, I would think. And they do have to have a relationship with the company. They do have to be reasonable at the end of the day. They can't be pig-headed or stupid.
They have to remember who's paying them.
Well, I won't go there. So I think the system will work there. It'll take a few years to get the wrinkles out of it and get them working.
Being a partner yourself, are you up for it?
Look, I think the Chartered Accountants publication in the section titled Challenges, the first one is, possible increased litigation. I think that's going to go through everybody's mind because you've got a different responsibility about what you're having to articulate. But I think for being up for it, yes, because it enables you to tell a richer story and to differentiate yourself on value and insight. And the audit profession is very collaborative and collegiate, but it is competitive. And so if that is able to show what you're adding to a company, surely that has got to be a better story than I issued the right boilerplate opinion.
What do you think, Teresa, in your jurisdiction?
I think absolutely. I think that I'm very proud to be part of the accounting profession. It's wonderful, the professionals you meet through your career. And it's a different way of thinking through things, a different way of looking at problems, but absolutely we're up for it. I absolutely believe it. I think it may take a little bit of a learning curve because it's going to be a different way of communicating, but we're going to rise to the challenge.
I'll now call for the question from Professor Kerry Jacobs. All our questions are coming from the same table.
Absolutely.
That wasn't planned.
I think in the new tradition.
You'll get a go. You'll get a go.
I think in the new tradition of Q&A and traditional audit practice, I have to declare I don't have a criminal record. Having stated that, I want to pick up on. I'm working on it. I'd like to pick up on this technology disruption, and the Institute has recently produced a report highlighting these dramatic changes in technology and how that's going to impact the nature of work, particularly the work of the accounting profession. And I think we're seeing this very clearly in government, and most obvious forms are things like the MyGov website, standard business reporting, which is a variant of extensible reportable markup language, XBRL. And I think it's dramatically changing the way accounting information is collected, presented, and used within and beyond government. However, a lot of the accounting standards and initiatives that we've seen, such as accrual accounting within government, is still fairly heavily focused on a compliance-oriented financial accounting approach. So my question is there a future for an accounting which moves beyond that particular compliance focus?
Was that directed to anyone in particular?
Well, I was going to try Teresa and Kath, but I'm happy to direct it to anyone willing to take it.
Okay. I think one of the greatest things about technology is that it's opened. When I started off my career, you would do samples, right? It was all paper, and you're looking at. I started off as a logistics auditor, and they'd give me 200 sample items, and I'd go through and think, oh my. And the thing is, it was such limit. We were doing the good job that we could back then, right? The thing is, we moved into a world through technology and data mining. Data mining is so late 90s even. But through data mining, you went through having some small little judgmental sample to something where you can actually look at an entire universe. We've morphed into a world where big data, people like to throw that term around, big data. And a lot of times people use that in different ways. They don't really understand even what that means. Big data has the ability of looking at things not just in relational databases and connecting a couple of relational databases together. It actually has, you can have the ability to connect it with things like unstructured data, pictures, PDFs, all sorts of things. And so from an accounting, looking for exceptions, fraud scenarios, big data, if we actually get our arms around this from an accounting profession standpoint, we can actually not only see what fraud or what types of anomalies have happened, but we can start using it to predict things in the future. And so I think absolutely there's so much potential right now in the era of technology. We're nipping at it right now. We're only just seeing the little bits of it in the front end. But I think that this is a really exciting time to be in our profession.
And I think I've got a colleague in the audience who worked on standard business reporting with me, so it's to try and make it a simple thing to digest, and we have to go to acronyms of XBRL. But essentially, in simple terms, if every set of accounts was lodged through the ASX using XBRL, the ability to quickly analyse that data, to do industry comparisons, to break down segments, yes, it'll help the regulators enormously direct their effort, but it actually would help the market not only have a baseline set of data which at least you know is correct that's gone in, so we tick that compliance box, but it enables us to do that analysis and comparison, which I think is perhaps done in a much slower, more rudimentary way. So there are some other brave things we have to take in Australia, which is, yes, all listed company accounts should be lodged using an XBRL format, and we're not there yet on that one.
Okay, our next question, and I'm hoping it's not from this table, is Geraldine Marjorie. Oh.
Good.
I was going to ask, with the new report, we've been talked a lot about investors and probably more sophisticated investors, including fund managers and institutional investors. Do you think it will enhance the mums and dads investors' understanding of the audit report, given that we sort of do acknowledge there's a bit of an audit gap in terms of understanding what an auditor actually does and its role in the financial reporting chain? To anyone, really. So.
Well, I did the test when I told my 24-year-old daughter what I was doing tonight, who is not an accountant, as I was sharing with Emma, and she said, well, what's this all about? And I showed her a set of accounts, and I said, so would you read these if you had shares in Commonwealth Bank? She goes, oh, no. And then I said, well, would you read this sort of audit report? Well, she goes, it's shorter, it's easier. So I think it would actually give people a lens and an insight and to actually enable them to glean, to your point, Ian, the plain English, some of the factors that have gone on. So, yeah, I think it does sort of distill a story. Anyway, pass the 24-year-old test.
Did you have another question? Because the question I received doesn't look like the question that you asked. And I quite like the question that I originally had. Do you not know what I'm talking about?
The first or the second one?
The one about the... can I just read it out? Because I think it's such a fabulous question. Perhaps it didn't come from you at all, but it's a good question. And it was, do we need to do more to help the general public understand public sector reporting so that we can move beyond only discussing whether we have a surplus or a deficit each year?
Ian.
Ian.
You're retired.
I think it's very challenging. Let me say the profession has done its very best to produce a standard that sort of harmonises the generally accepted accounting principles with the government finance statistics, that is the budgetary approach to preparing accounts and the budget. And for those who are really, really interested, they can go and see this beautiful harmonised financial report. Nevertheless, you cannot stop the politicians or the government of the day will always focus on the budget bottom line, which is essentially a cash figure. It's a very partial view of the Commonwealth's financial position. It's been there for a long, long time, and despite the accrual changes, it's still there. So, I mean, I think you do need a level of knowledge to really get your head around the government's financial position. But most of the analysts do the work, and then we can all read about it in the press, and we can see, and I think most people understand debt levels are increasing, etc. So they're understanding some of the fundamental changes which are going on, if not truly understanding the exact nature of the Commonwealth's financial position. So I could never say the world's going to be a beautiful place and in a year or two it's not going to change too much. But can I say the profession, to its great credit, has done a lot of work in getting better and more comprehensive financial reporting into the public sector and then harmonising it with the traditional budgetary approach. So there's probably more to be done to get greater clarity. And at the moment, when you look at the government's accounts, there's so many different bottom lines get drawn, you don't know which ones are the really important ones to focus on and which ones aren't. So it's extremely complicated.
And it becomes tedious and impossible to compare it to previous years.
Yeah,
that's the thing that everybody always wants to try to do, is try to make some comparison.
Give a bit of a counter view. I think it's a shame the way it's been handled in Australia, and I think the conflict between GFS and accrual accounting has never been resolved here. And GFS is for managing the economy. The economy is broken up into sectors, and you've done economics, Emma, and that's fine. And it was traditionally done on cash because they didn't have any other information, and that was fine too. The accrual accounting is more about managing the government's finances, its own finances, not that of the whole economy. And there are two quite different reasons, and you can justify two quite different results, looking at it one way or looking at it the other. And, you know, the really sad thing is the budget result, which is underlying cash, which means it's cash, but you take out the bits you don't like too much. I went to a symposium some 12 or 14 years ago of 13 countries, including the US, the UK, Australia. It was Treasury people. Everybody got up and talked about their deficit. I asked everyone how they calculated their deficit and got 13 different answers. So when we're talking about the deficit in the United States and the deficit in the United Kingdom and the deficit in Germany and the deficit in Australia, they're not comparable. Europe's getting a bit better now. That was before the standard reporting. So I think a real opportunity's been missed, and there is a simple story still to be told, if you could pull it together. But Ian's point about, I don't want to be too scathing about politicians, but they have their own motivations, which is sometimes different.
And maybe we've got time, I think, for just maybe one more. Yes. Hold on. We all want to hear it.
Thank you.
Ooh.
The auditor's nightmare, the material error from last year, and explaining that, it's going to be obviously going to be in the audit report that they're going to have explained, without having lawyers involved and not incriminating themselves. When investors are going to be looking for blood and recouping funds that they may have lost through some
Oops factor?
Yeah, absolutely.
Yeah.
And so that's really...
technical term.
Yeah, so it's... and hence probably maybe some of the pushback on the new audit report, so...
Kath?
Well,
Sorry,
No, I don't think that will change. I mean, fundamentally, the new audit report and the key audit matters is to, I guess, enhance the story, and, you know, if there's an error and if it's material and you've got to disclose that, those standards prevailing still exist. So, you know, that sort of rule of law, it's probably more emphasised, though I think your point is, did you pick it up as a key audit matter or not? And was there a disconnect on that sort of side? But those underlying audit standards and principles still exist. So this is, I guess, an added layer. That's probably the layer of nervousness about, did you articulate the right story, which is probably, though, going to shine a light on, you know, are you competent and focusing in the right areas? So that's probably, to your point earlier, Rob, are we up for it? Yes, I think it's going to add a greater degree of focus, because more people are going to be considering what you called out as your key audit areas and what you did. So, so I guess it's going to sort of bring the knitting together a little more.
Do you think there's going to be, to your point, a greater degree of expectation around what is in these reports, and therefore a greater degree of people are relying on them to a greater degree because they believe, rightly or wrongly, that you've drilled down a little further? And
look, that's probably true. I mean, this is all going to be a journey of exploring, and not that everybody should race off, and they shouldn't, but the Rolls-Royce report was inordinately long. And, you know, we don't want to get to the stage where you're sort of writing War and Peace and, you know, the next New York bestseller. But you've actually... I
don't think it's going to be a bestseller.
No, I don't think so either. I'm not sure anyone's going to buy. But I think it is going to it's going to be that increased emphasis on really calling out, am I looking in the right areas, because you're actually having to articulate that in plain English. So, yeah, it is going to put a degree of focus on those areas.
And I might just get you all to make a brief observation on that before we close. Teresa, again, I guess it's that vulnerability that you might feel as auditors about what you're saying, what you're putting out there.
But the thing is, I agree that there's absolutely, you're putting your neck out there because we're having to use our professional judgment and write it down, right? But the thing is, that's what value we bring to people who aren't, or the experts. People are relying on us for our expertise, and there's going to be a certain amount of risk in that, right? But the thing is, as long as you go about it and you use good professional judgment and you're prudent about it, you're going to bring more value, even when you're taking some risks, than if you weren't there in the first place. And so I think absolutely it's worth it.
Ian?
Yeah, I think I'm reasonably comfortable with it, but it will require a very considered approach to the whole audit, and that's expected today. So at one level, that's not different, but it will require consideration because for key matters, generally, it's just not a case of the team going out and just getting the audit done. It's a case of saying, well, what actually are the material areas? What are the key judgments being made? How good is the evidence? There's a range of considerations, and then you say, and what sort of level staff will we be putting on this? I mean, clearly you don't want to put junior staff on something that potentially, or solely junior staff on something that potentially will be a key audit matter. I mean, you want to put the horsepower where the issues are going to be. So through your own actions in setting up the audit team to do that audit, you will be flagging potentially key areas in the very early days, and then you may or may not end up with a key audit matter. I mean, nothing is predetermined here. If there is good support for the numbers, if it's a sound system, well, sure, it might be something to be discussed with the audit committee, but it certainly wouldn't become a key audit matter. In fact, I found myself, and this is a biased perspective, of an audit viewing the audit officer's own financial statements across the road. And I thought to myself, would there ever be a key audit matter? Because, for instance, the office is largely appropriation funded, easy to tick that number. A lot of the office's expense are staff and contractors. Is that complicated? A few provisions for long service leave? No, no, no. So I'm saying to myself, and you can say, what a biased perspective he's got, there's probably no key audit matters if anyone was doing that audit, even if they wanted to, apply the standard to the office. And there will be many audits where audits are straightforward and it won't be considered appropriate for an auditor to include a key audit matter in the report. It's only in those material, complex areas that the auditor's got a communication job to explain how they got comfortable with the number, or if they qualified the accounts, how they didn't get comfortable with the number.
So there would be occasions where you wouldn't have any key audit matters.
I'm sure Ian's right on that. But it's making that judgment and then sitting there and saying, gee, I mustn't be a very good auditor if I haven't got any key audit matters. I've got to think up something here.
Cook up something. And on the matter of the vulnerability and the risk involved, does it escalate with this new requirement?
Yes, I think so. And I mean, it's going to take a while to work out. Just the drafting, I can see it's going to be quite delicate in some circumstances. And you have to be very careful what you say and think about how people will read it. It's not going to be easy.
On that cheery note. Thank you all so much for being such a great audience, and please help me to give a warm round of applause to our panellists, Teresa Graffenstein, Kath Ingram, Ian McPhee and Ian McIntosh. Thank you very much.